My name is Mark Schneider. I am head of DEUTZ IR, and I am happy to share with you our latest company presentation. Our mission at DEUTZ is that we ensure the world keeps moving, and we do that for 160 years. That means we are the independent engine manufacturer with the longest tradition. We are headquartered in Cologne, and we develop and produce innovative products from diesel to gas to electric and hydrogen powered drives for off-highway applications. That's important to know. We have a global production network and a global service network. We invest around 100 million euros every year in research and development, and roughly one can say 2/3 in classic drivetrains and 1/3 in sustainable drivetrains. There are more than 5,000 colleagues worldwide that ensure that the world keeps moving. We are an independent engine manufacturer. There are also OEMs that produce their own engines. We are number 4 currently, and our goal is to establish ourselves among the top 3 independent drive manufacturers by the end of the decade. We see the room for consolidation. Not every OEM will produce its own engines, or at least not the same amount, and we are ready for consolidating the market. Here you get an overview of our customers in all our different fields of activity. Construction, for example, Volvo Construction, our biggest customer overall, but all the international names, the Japanese Wacker Neuson and others. Material handling, we have Terex and GLG, for example, in the US, Manitou from France. When it comes to agricultural equipment, we have DEUTZ FAR. DEUTZ itself has been producing tractors. We don't do that for a couple of years now. But all the other international players like Echo, Fendt, and one of the latest customers, Claas. And then we have specialities with Kercher, Ponzi, Stadler when it comes to trains, for example. Here you have another overview of our activities. We have construction machinery. That stands for around 1/3 of our business. We have material handling. That stands for 1/4. Agricultural machinery with 13%, stationary systems growing with decentral power supply around 10%, and others with 3%. Then I can give you an impression of the fuels our engines use. That's diesel, synthetic fuels, biodiesel, gas. That's the classic side. And on the new tech side, we have battery electric drive systems and the hydrogen combustion engine. Our margin performance remains resilient and more robust than in recent years because of a shift in portfolio and all the measures that have been taken. You can see that in former times when we sold classic units of around 130, 140, 160%, our EBIT margin would be around 1 to, in best case, 3%. But even in the difficult year 2024, at the bottom of the cycle, expect an EBIT margin between 4 to 5%. That shows the higher resilience of the DEUTZ business. We have clear strategic criteria which define our path forward. We want to grow profitably. We need the relevant portfolio, and we want to have an even more resilient setup. What drives our growth? Very dynamic trends, the urbanization and the growth of the population. People need to live, people want to be fed. Climate protection and the new energy mix. Innovations are needed, markets are shifting, and the digitization and rising consumption drives especially the materials handling sector and the localization of supply chains. Looking ahead, we need to continue to grow. Size matters, and we have a concrete plan, and we want to be less cyclical than before. We are starting at more or less 2 billion euros annual turnover, and we expect the year 2025 to show around 2.4 billion euros. And then we want to grow even faster until 2030, where our ambition lies at around 4 billion euros. Based on a structured strategic dialogue, we now how to achieve the next level of growth driven by the trends I already mentioned. And the strategic dialogue sets the targets based on our capabilities, the engineering expertise, the application know-how, our customer focus, the brand recognition of DEUTZ, our worldwide footprint, and the committed teams at the company. We call our strategy Dual Plus. I start with the focus on the classic side. So we have three parts of the strategy: the classic, the combustion engine side, solutions, that's the new name for energy, decentralized power supply, and new tech, the sustainable drivetrains. Then we have the very important service part of the business. Our revenue ambition of 4 billion euros until 2030. Classic grows organically, but the relative part of classic will decrease. Service is stable in a growing business with 25% of the annual turnover, and solutions will also grow and contribute. What does this mean going forward? I was already talking about the consolidation of the market. We will align and our engine portfolio. We will drive performance via new business models. We expand to India with our partner TAFE. We want to grow the service business. The ambition is to have a service turnover of 1 billion euros by the end of the decade. We want to close geographical white spots on the service network, expand into new business models, and we want to invest in digitization. When it comes to solution, we are entering new business with the right to win for DEUTZ, with a higher value chain coverage and long-term sustainability. And we want to expand the energy business and want to achieve more than 500 million euros revenue by the end of the decade. Here I got an example of the strategic partnership with Daimler Truck. We took over the rights to market two Daimler Truck engine families in the off-highway fields, and that helped us to partner with new customers like Claas, Bell, a mining company from South Africa, or Ponsse from Finland. This adds around 300 million revenue per year, and that for the first time will happen in 2025 for a complete year. We are also partnering with John Deere. We have developed an engine together that will be available from 2025 on, a 3.9 4.0 liter engine. And this shows also the consolidation in our industry, where two companies are partnering to develop one engine, and that helps both partners. I mentioned our partner in India, TAFE. TAFE uses DEUTZ engines to have products with a premium engine, and this opens us the gate to the rising Indian markets and other Asian markets around. All these measures make us even more resilient, as I mentioned, and one helpful trend is also to have dual sourcing and best cost country sourcing. India is one example. With TAFE, we will build up a new supplier base in India. We will expand our dual sourcing ambitions, and we will utilize in-sourcing opportunities to increase the resilience and strengthen our negotiation power. When it comes to service, I mentioned that we want to grow the business to revenues of 1 billion euros until the end of the decade. Our service business consists of different parts. We have the spare parts aspects, we have billable service, which we want to increase, and we have the exchange business where we exchange used engines and put in renewed engines with a new warranty. In 2024, we expect more than 500 million euros revenue in service, and in 2024, even 600 million euros. Our Dual Plus strategy focuses also on solutions where we want to capture the value beyond engine and service by entering business with the right to win. And we focus on tailored new technology offerings. We formerly called green. They are now called new tech, and they are based on customer and market demands. Currently, we have two offerings in new technology. We have e-products family, and we have the H2 engine. That's a combustion engine, and it uses 80% of technology we have already developed for our diesel combustion engines. And that's ready for serial productions. First fields of applications are gensets and are the railroad system. Here you can see the next generation of regional trains where we supply two H2 combustion engines for a regional shuttle train by Stadler. We've shown that at the InnoTrans in Berlin. The first trial in Turing is starting in 2025. We have also an H2 project in China. We have delivered the first 4 H2 gensets to China, where they are used to save CO2 by using gray hydrogen as a byproduct of Koch's plant, and they use it to generate power. Here you can see two examples of our gensets. The red one is from Morocco and white one is from the USA, Blue Star Power Systems, a company we've acquired in August 2024. There are many different trends supporting the need for decentralized electricity supply, especially in the US, where you have regular outages. Blue Star Power System is one of the top 10 genset producers in the North American markets, and we expect a revenue of more than 140 million euros in 2025. Here you can see the growth path and the legacy of Blue Star Power Systems being 20 years on the market now. The revenue almost doubled since 2019, and the company is already sold out for the next 12 months. So there is more growth than expected. How will we lead Blue Star Power Systems? That's part of our future business unit, Energy, that is responsible for developing the energy business overall. It's managed on a standalone basis to maintain the entrepreneurial spirit, and we will see a selective integration focusing on commercial synergies, the sufficient governance, and realizing the value chain potentials on a long-term perspective. Here you can see how we would like to deploy the region-specific strategies to grow the energy business, both organically and inorganically. We want to expand the DEUTZ business from Morocco into Africa and Europe, and we target new strategic partnerships. We want to grow the Blue Star Power Systems business in North America organically, and we also have plans for South America and Asia, especially China, and we also want to use our Indian partner to localize gensets in India. It's all about growth in resilient service and solutions segments, and we expect the classic part of the business to recover in the cyclical range. I was talking about our 2030 ambition. We also presented midterm targets for 2028. These are 3 3.2 to 3.4 billion euros when it comes to sales, an adjusted EBIT margin between 8 to 9%. And good news for our shareholders, we want the dividend per share to remain stable, or we even want to increase it in comparison to the previous year. So that's a more ambitious dividend strategy than the one we had in place before. Thank you for your interest in DEUTZ, and please do reach out if you have any questions. Thank you.
Disclaimer. As described in the legal section on our website, c11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. C11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.